Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. What's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to a new busy day in the financial markets. My name is Andrew, and today I'm bringing you the latest news in the markets along with a very special guest all the way from Cape Town, South Africa. After a slow start of the week, like Mondays usually are, the economic calendar starts picking up today, and traders are waiting for the inflation data from the US to be able to pick a direction for the week. Also, the earnings season starts today with JP Morgan, Goldman Sachs, PepsiCo giving the start of the season. And tomorrow we have Bank of America, WellsFargo, Citigroup, and BlackRock reporting. With the S&P 500 and the Dow Jones at record levels, what to expect from the markets this month is the question on everyone's lips. More about inflation, cryptocurrencies, and Forex trading with my very special guest for today in just 30 seconds from now. Stay tuned. Right, and as promised, ladies and gentlemen, traders from Cape Town, South Africa, Reiaan Hobson. How are you, Reiaan? Welcome.
I'm good. Thanks a lot for having me.
Always a pleasure. I wanted to welcome you in Afrikaans, but you know how my Afrikaans is, so I didn't want to take a chance, just in case compliance is watching. How are things in South Africa, Reiaan?
It's a bit tense. We have a bit of I will not say a bit, but there's some heavy protesting that's going on in South Africa. Wow. It's a bit tense, especially in KZN province. It's a lot of factors that goes into it, but it's really getting a bit out of hand.
So what are the people actually protesting about?
Well, as what the news say, it's starting with the former president that went into prison. And then after that, that is where the hell broke loose. But now it's coming to criminality, where people starting to loot shops, malls, and it's actually creating anarchy. And it's most of the time is your small businesses that suffer. And approximately, that is now, according to estimates on social media, there's between 20 and 40 people that died already. And sorry, and then shops that get looted, malls. We're looking at approximately about 700 shops that get looted so far. So it's really getting intensified, and it's really bad for the loss of life.
Right. Well, I'm very sorry to hear. You know how I feel about South Africa and South African people. And my best wishes and best thoughts are with you guys for the situation in the country to finally calm down. Yeah. And get back to, let's say, pre-COVID levels. Yeah. We're way before that when things were a bit brighter for South Africa. Right. In 30 minutes from now, we will watch together the CPI data release and its impact on the US dollar. Tonight, we have the interest rate decision on the Kiwi dollar. And tomorrow, we're going to have the interest rate decision from the Bank of Canada. And this is only today and tomorrow. Let the volatility begin, I say. Let's have a quick look at the economic calendar and see how the markets open today and what has happened already in the economic calendar. Right. I think now everyone can see the economic calendar. Yeah, we saw imports and exports and trade balance data coming from China very early this morning. All three came out in green. We had some news from Europe. Yeah, we had the consumer price index, basically inflation from Europe, from Germany, from France. What else did we have? We had the producer price index from Switzerland. Yeah, and they all came out as expected, apart from the French consumer price index month to month, which came out 1 basis point below consensus expectations at 0.1% versus an expectation of 0.2%. In 22 minutes from now, we're going to have the inflation data coming out from the United States, with the core CPI expected to come out 4% flat, an increase from the previous 3.8, 0.4% for the core CPI month over month for the month of June. Yeah, we see the CPI data expected to come out 0.5% versus the previous 0.6%, followed by 2 FOMC press conferences, and later on tonight, the API weekly crude oil stock. Big news coming soon. What's your take on this one, Reiaan?
What do you reckon? Core CPI. Yeah, on the core CPI and CPI, which was actually a bit funny for me this morning with the Chinese news that came through with the GDP. They showed actually that the exports to the United States is actually a bit slower. That was a bit, for me, I would say, a bit of a good sign to say, okay, things are a bit slowing down or getting to normal in the United States, but it's still about 17%, but it's way better than the previous numbers. So it could be that things are maybe getting back to normal in the United States, and maybe we might get a softer CPI number and core CPI number in the United States, as now supply is getting a bit better in the United States. But I will not put now my head on that to say we will get a softer CPI number. But that is what the market expects. Maybe Jerome Powell is right by saying it is transitory, or maybe not. But for that news, I'm actually sitting in two-way street there.
Right. Well, Jerome Powell's stance last time was very dovish, yeah, and he's basically looking forward, yeah, to take action if inflation gets out of control. Now, if I remember correctly, last week you were caught in the crossfire when you were trading crude oil, right? How is this week looking for you so far? Are you still on the market?
Oh, definitely. I'm still in the market. Last week was a bit heavy. I didn't take any trades whatsoever since last week. I'm waiting actually for today and for this week, with Jerome Powell making his testifying in the later on, I think tomorrow. So I'm just actually basically sitting, rather wait for the information to come out, and that is where I will make decisions afterwards. But my losses for the last time was a bit heavy, but we all get over it and then we move on.
How do you feel, by the way? How do you feel when you have to cut your losses, Reiaan? How does that affect you?
How does one feel when you lose money? It's the worst feeling ever.
I know, but we're professionals, and we should take things, a bit easier than the average, let's say, trader.
Absolutely. And then we need to talk about it also via our show and say, okay, no traders and all of those things, that things will be all right. It's a bit terrible, but you have to just take it on the chin and move on.
Yeah, this is correct. You can't have all winning trades. I know this from experience. Probably you know that as well. And probably many experienced traders know that as well. It's almost impossible, yeah, to get all the trades right. Right. Now, big week in the markets this week. Apart from the CPI data coming from the US, it's also the start of the earnings season, with some big banks already giving the start of the earnings season. They already reported. Are you usually trading the earnings season, Reiaan?
I actually just normally look at it. I'm not taking that from maybe to look at the FX market and see how the banks are reacting. Are they borrowing more, or are they saving more, and those type of things. I'm actually going to look at the data from the earnings season, especially from the banks, to see actually how are things with the banks. Are they solid? Does the American economy look strong? Do the people borrow money? Do people pay back their debts? Those are the things that I'm actually looking at. But I'm not so much in banking stocks to look at. I'm more looking on the FX side and to see how will it affect maybe the US dollar. The data for me, I will sift it quite heavily through because there's some few things that I do expect because it looks like the banks are hesitant to borrow money to people. That is what I think the data will say because if you look previously, people have stimulus money and all of those things. So normally people will not borrow money. And those are the things I'm going to look at the data, and that will give me an idea of how the FX market, or will the Reserve Bank start to taper? Does the bank sit with excess cash that they sit nothing with? Because that is what I expect. They're sitting with a lot of money and they don't know what to do with the money. And because a lot of money has been pumped into these banks. And it's not that people are borrowing it left, right, and center. Only the housing market. Only lately I see the credit market is moving a bit up. People borrow more, but it's not that it's been aggressive. And I think that is what the market was expecting.
Right. Check this out. Let's have a quick look at how the start of the earnings season went today. Check this out, Reiaan. We're looking at all green for JP Morgan, PepsiCo, Goldman Sachs, First Republic Bank, Fastenal, and ConAgra Foods as well. All green. JP Morgan absolutely smashed it this earnings season with 3.78 earnings per share versus an expectation of 3.16. Yeah, with a revenue of over $30.48 billion versus a forecast of $30 billion. Yeah, and with a market cap of over $478 billion. Wow. What's your take on this one as the start of the earnings season for the second quarter of this year?
That is actually very good numbers there. And if I look at the forecasts and I look at the actuals, especially if you look at JP Morgan, for example, its 30 billion was forecasted. It came just about 30.4, but it's actually quite a huge difference. And then you look at Goldman Sachs, for example, 12 billion, and then like 15 billion just gets smashed. So that is actually very good things. But what I want to actually to more look at is that where does this the money come from? What does it come from? Your loans? Does it come from actually them saving money? Did they borrow quite a lot of money? So those are the things that are actually going to look. The numbers look nice, but the nitty-gritty things is actually where it comes in, where you look at the balance sheet of the banks. That is for me the more concern. So I will sift them through entirely to see actually where does this mega profits are coming from. But as things always looks nice in the front of you, it's a very good start for the earnings season.
Man, JP Morgan basically reported a 155% jump in quarterly profit. That is mind-blowing. Mind-blowing.
It shows that the U.S. economy is literally on fire. And you can see that with the bond market and how that behaved as well. You can look at the inflation numbers. So people, their spending that's literally going on. And that is actually good things. But too much spending can also be afterwards a problem. But with the banks look rock solid. It looks like there's no threat of what happened in the last recession is everybody gets spooked by the housing market that is actually going very, very high, especially the house prices. So there's no problem as it is now. There's no problem in the housing market, although it actually is hitting record prices. So those things are good. The asset prices are doing well of the banks. That is where the profit is coming from, I think, for now.
Sure. Well, banks always do well. And also the U.S. banks were forced to set aside billions last year for possible loan defaults. Yeah, but the accommodative monetary policy and stimulus checks kept the American consumer healthier than initially feared, allowing banks release more of their reserve capital. Okay. Also, widespread vaccinations have led large parts of the United States to ease pandemic restrictions, setting the stage for a broader economic recovery. So as long as this stays on track, then probably we're going to see a very, very green second quarter earnings. Now, let's have a quick look and see What else was announced in the markets today? Because we had a lot of news coming out. We're going to talk about cryptocurrencies as well, but after the data release that we're going to see in 15 minutes or so from now. Okay, because if it's Tuesday, it's Crypto Tuesday here at InstructFX. Yeah, but we have the start of the earnings season today. Yeah, we have big things going on in the markets, so I've decided to start with those ones. Right, let's have a quick look. There's one thing scaring the shit out of me, if I can be honest, and I'm going to show it to you now. There we go. Yeah, this is the news that was released earlier on. And I tell you why I'm so scared about this is because I've been vaccinated with the Johnson & Johnson vaccine. Right?
Okay.
So, right. Let's go through the article and let's see what's happening. I mean, so far, if you look at me, I doubt you can see any side effects from the vaccine. Let's give the article a read through and see what is happening. So Johnson & Johnson said on Monday it was in discussions with the U.S. Food and Drug Administration about rare cases of a neurological disorder called the Guillain-Barré syndrome, something like that. It's a French posh name, so I'm struggling with that. That have been reported following vaccination with the Johnson & Johnson vaccine. Right, the chance of having this disease, let's call it the syndrome, occur is very low, and the rate of reported cases exceeds the background rate by a small degree. However, the statement follows a Washington Post report on Monday, which said that the FDA was expected to announce a new warning on Johnson & Johnson's COVID vaccine related to a rare autoimmune disorder. Yeah, this disorder, this syndrome is a rare neurological disorder in which the body's immune system mistakenly attacks part of its peripheral nervous system or the network of nerves located outside of the brain and spinal cord. Right. Only reading this article gives me goosebumps. Wow. I seriously don't know what to say about it. Now, I've done some research earlier on, and I don't know what to say. Now, usually you feel the changes in the first few weeks. Now, for me, it's been over a couple of months since the vaccination, and apart from those two, let's say bad days, awkward days that I had following the vaccine, I didn't really see any other side effects. Fingers crossed. I'm one of the lucky ones.
Absolutely. And the thing is also that in South Africa, I got the notification yesterday. They're actually working in groups. So the ages between 35 and 42 can go now, which is my age category. So we can go now and get vaccinated. So obviously in social media, so obviously I'm friends with people in my age category group, and so we were discussing like, will you go? Will you not? Will you not go?
So what's the plan?
The thing is, obviously a lot of people agree that they will go and get vaccinated. On the other side, we're seeing now evidence that is transpire what is the side effects and all of those things. Look, obviously there's nothing in the world that is guaranteed. There's always something with side effects and all that. I'm not saying that this thing will blow up and all of those things, but there will be side effects, of course, but I just hope that it's obviously not deadly. But yeah, in South Africa, we're still in two minds here. A lot of people are anti-vaccine, and some will take the vaccine. But for me, don't ask me that question.
All right. Well, the thing is, the fact of the matter is that sooner or later, okay, we're gonna have to get vaccinated. Now, of course, you get some side effects on a very small percentage, 0.0 something percent. So if you were to weigh that versus the benefits of the vaccine, then I think it's a no-brainer.
Yeah, but I absolutely agree. Even with last night, with my friend, actually, he passed away.
Not because of the vaccine, right?
No, not of the vaccine, not of the vaccine. But it's actually the Delta variant is actually spreading heavily in South Africa, and it's just last night we got the call and to say that he passed on, but. It's still a very sad moment for a lot of people, but that is actually where obviously you need to take these things serious to say, okay, you need to get vaccinated, because obviously he was not much older than me.
Right. Yes, and unfortunately, some people do fall victim to this bloody COVID-19 virus that turned the world economies upside down. Right. Let's focus on the positive now. Not of the vaccine, of course. We saw what was announced regarding the Johnson & Johnson. Right. I have another news from Europe, which I want to share with you now, which basically is France fines Google 500 million euros over copyright row. This was released earlier on by Reuters. So France antitrust watchdog slapped a 500 million euro fine on Alphabet, Google's company, on Tuesday for failing to comply with the regulator's orders on how to conduct talks with the country's news publishers in a row over copyright. The fine comes amid increasing international pressure and online platforms such as Google and Facebook to share more revenue with news outlets. What's your take on this one? I mean, we see all the watchdogs basically running after the big companies for years now. What's your take on this one? Do you think it's fair for the big boys to start paying tax, and join the regulators?
It is actually a very difficult one, because, as you said, everybody's running after them, that they need to pay taxes, they need obviously to comply with regulators. The thing is, does the regulators have the proper structures in place to regulate these online platforms? That is what I was normally thinking of. For example, you have Google, Facebook, because normally they regulate your normal businesses that you have. Now we're sitting with something that's online. Do they? Because the last time when they actually interviewed Mark Zuckerberg in the United States, it looked like they were starstruck in that whole debate that they have there. And they didn't look prepared to ask him the hard questions. The same applies to Google. Do they have this the proper structures to regulate these companies? And obviously, if you don't have the proper structure, it's not like your normal business that you can, where they sell stuff and all of those things. This is a big company and it's online. And I think that most of the governments across the world and regulators are totally behind technology. You can find them, but do you have the structures in place to regulate them? That is where the big question comes in.
True, but on the other hand, these giants, Google and Facebook, are advertising. They really don't care about any regulation when it comes to advertising, because for them, it's a money-making service. Because I'm paying for advertisement on both platforms. With my company, I'm sure you do the same. And last week, I started getting emails that my ads were taken down from Google and Facebook due to regulatory changes in Europe. So let's see what's going to happen. But the financial regulators seem to be on their case, and this time they managed to find them a hefty amount of 500 million euros over copyright. Right. We are about 8 minutes ahead of the announcement that we were waiting for today. Let's have a quick look at the markets and see how the most traded assets performed today. Okay, as usual, I have investing.com trading charts on a 30-minute chart. Okay, and we're going to start with crude oil WTI and see how crude oil WTI performed in the last 24 hours. Right, we can see the current market price being $74.39 after a retest of that 50 MA to the downside. So after the opening today, we saw crude oil WTI pulling back a bit on the European trading session. And as we get closer to the US markets open, as usual, we can see the volatility picking up. 74.39 with the RSI pointing upwards, stochastic pointing upwards. The price action is above the 200 moving average. What do you reckon, Reiaan? Are we looking at crude oil potentially going up to 75, 76 again?
There is a very big probability to go up where it can go to 75. With the shortages in the United States with the inventories. The other thing is also with OPEC, where they didn't sort out that whole story with the United Emirates and OPEC. So there is a strong possibility that it can go up, but there's also the strong possibility where it can go down, because that the United Emirates story can come in at any time and pump oil out, and then it just go back down again. So I would say for short trades, basically, maybe it can go up, but you have to be alert there.
Fair enough. Also, America announced that for the second week in a row, they added more oil and gas rigs, once again in an effort to try and balance the oil prices. Right, let's have a look at the euro. The mighty euro traded against the US dollar, which traded to the downside overnight, and it traded to the downside on the European trading session as well, since the markets opened today. We see a bit of volatility happening right now, with the euro trading at 118.50, a few minutes ahead of the CPI data coming out from the United States. However, what's a bit worrying is that the price action fell again below the 200 moving average. Okay, and if we look at it on a 4-hour chart, there we go. Yeah, we can see that the euro is in a downtrend versus the US dollar since the 1st of June. Yeah, so for over a month and a half, we're looking at a downtrend for the euro. Now, in this case, what do you reckon? We're looking at a potential retest of that 200 moving average to the upside, yeah, and the continuation of the downtrend.
Absolutely, that is the perfect scenario that you actually put out. I think we maybe going to look for a retest, and then it actually going to go back down there. That is the one that I was looking at as well, because there is potential for the euro to actually slightly go up, but I don't think it will stay for long there. After the comments of Christine Lagarde, where she actually changed the definition of the inflation targeting story to more of Americans' policy stance of symmetric 2%. I was actually surprised by what she was saying. And for some people, it was more bullish. For others, it was more dovish. But I think, obviously, with today's news from the US, maybe that can actually, if the news come out now bad for the United States or for the dollar, and I think definitely that is where we will see a retest. That is actually a high probability.
Right. It's a very interesting candlestick formation. I'm having itchy fingers. I'm tempted to enter the markets ahead of the announcement, but for the sake of compliance and for the sake of this show to move on, I'm not going to do it right now. Right. We're looking at the pound versus the US dollar on a 4-hour chart, which has been trading sideways for the last couple of trading sessions. 138.55 for the pound, with the RSI somewhere in between and stochastic pointing downwards. So we see a bit of divergence between indicators, but we saw this retest of the 200 moving average to the upside. Yeah, and if you look at the euro charts versus the US dollar, you will see they are very, very similar. Mm-hmm. Yeah, just the pound managed to do it faster. Right, we can see the volatility picking up, guys, as we get closer and closer to the data release, with the pound accelerating the downtrend. I'll just decrease it on a 15-minute chart. There we go. We saw this pullback a second ago from, wow, there we go. Look at this. Look at this on a 5-minute chart. You see what's happening? A bounce to the downside, 138.24. Wow, okay.
There's a news. Definitely the news is announced.
Yeah, let's look at the US dollar index and see what is happening with the US dollar index. Nothing is happening. It's still waiting for the news release. Quick look at gold, which, started... Wow, what is happening with this volatility, man? Check this out. You see, that's where the price should be. Yeah.
Yeah. And look, it's actually a huge jump.
1531, we can see a big drop below the 200 moving average. What is happening with this volatility, man? Let's have a quick look at the economic calendar. There we go. Data release came out. 4.5% versus an expectation of 4% for core CPI year over year for the month of June. Core CPI for the month over month indicates 0.9% versus an expectation of 0.4%. And the CPI for the month of June, 0.9% versus 0.5% expected. Wow. We're looking at almost doubling the target figures.
That is actually a news that inflation, it looks sticky. The inflation, because it didn't, because I was thinking that it's maybe going to simmer down. That is what the forecast was also saying, it's going to come down a bit. and it did not. It looked like it sticks. And it's actually a very upbeat, actually, inflation number that actually came out. And obviously, the market is basically nervous for the Federal Reserve that will start to taper and maybe move interest rates.
And Jerome Powell will start testifying tomorrow and the following day. So Wednesday and Thursday will be very difficult for the US dollar. A lot of volatility. Right. Check out the drop in the euro.
Oh, no.
I wanted to sell the euro a few minutes ago when we were seeing the uncertainty of the markets. Right.
We are missing out.
Wow. Okay. Now let's see its impact on crude oil. There we go. Yeah, we saw a bit of a spike in crude oil, 74.47, about 10 basis points spike in crude oil WTI futures as soon as the CPI data came out from the United States. We're looking at the euro pointing to the downside. Oh my God, I'm really gutted about this, to be honest. 118.09 for the euro. The pound is pushing to the 138.02 for the pound.
And if you look at the Australian dollar, the Australian dollar was
now. There we go, the Aussie dollar, just like the euro and the pound, more pushed to the downside once the CPI data was released. 0.7440. Why didn't I trade this position?
That was a juicy one.
Yeah, big spike. Right, let's see
when I looked at the Australian dollar, it was looking at going towards the 749. It looked like it was pushing upwards, but it was sitting flat. I was like, and now it's actually reversing quite heavily.
Do you know what this reminds me of? Do you remember years back when we had the NFP data release? We saw movements of 200, 300 points.
That was beautiful days. That was the time of Janet Yellen, isn't it? When she was still the Federal Reserve chair. Oh, that was beautiful days.
And even before that, even when Ben Bernanke was the Fed chairman, that's when those crazy movements started. Right. Okay. Big drop for the Aussie dollar, for the pound and the euro versus the US dollar. We're looking at USD CAD and USD JPY shooting to the moon. Let's see how the US dollar index is doing. Again, very aggressive move for the US dollar to the upside as well. And gold is pushing to the downside. Wow, I feel like we just witnessed the non-farm payroll, to be honest.
Absolutely. It's actually a very strange scenario when it comes to gold, because normally inflation and gold goes hand in hand. It's a very good inflation hedge. And you see inflation, gold is actually going down because of high inflation. I think there we will get something that goes up and down the whole time. But for the euro, British pound, and those currencies, I know they're going to go.
Look at the volatility. We see gold futures on a 5-minute chart trying to recover. Let's move to a 15-minute. Check out this volatility. Question from trader to trader. How many stop losses do you think got triggered with this movement?
It's a very good question. I always tell that to go in front of the news is a kamikaze trade. That is definitely a kamikaze trade.
It depends. This is one trading strategy. I mean, sometimes if I reckon I know what's going to happen, if I do my homework, that's how I'm going to enter. But in cases like that, I'm gonna allow a very wide stop loss.
Oh, but in front of the news, that is a touch and go one.
My stop loss. Let me put it this way. My trading will happen on a 1-hour chart. Yeah, or a 4-hour chart. And if anything, my stop loss will go somewhere there. So, how big can the announcement be to touch my stop loss?
Well, that news was good enough, but maybe if Jerome Powell talks, definitely will touch that stop loss.
We're gonna see that. Happening. It depends what he says as well. Right, big spike on gold futures on a 60-minute chart. We're looking at Brent oil futures that were almost not affected whatsoever by this announcement. Let's have a quick look at Bitcoin, see if anything happened with Bitcoin, and it did. There we go. Yeah, we see Bitcoin trading to the downside, $32,584 for Bitcoin today, and Ethereum took a hit as well, dropping over the $2,000 mark for the first time in quite some time now.
Oh, oh,
Right.
right.
Now,
That's it.
tell me.
If I can, oh yeah, it's actually down by 6% Ethereum.
Ethereum is down by 128%, 126%, 6% for the day. Yeah, 6%
6%
for the day. Right. Now, let's have a quick look at some crypto news and see what might have triggered this movement in the crypto sphere. Are you ready?
Go ahead.
Right. Okay, with pleasure. But before that, let's take 30 seconds adverts from our sponsors at markets.com. Okay. And then we're going to come back with some crypto news.
Perfect.
Okie dokie.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, and we're back with some cryptocurrency news. Now, one of the news that was released 8 hours ago was this. Traders are withdrawing 2,000 Bitcoins from centralized exchanges daily. What do you reckon about this? Let's go through the article first of all, so people that didn't get the chance to read the article will probably have the chance now. So, surging Bitcoin outflows from centralized exchanges suggest that Bitcoin markets could be in an accumulation. The number of Bitcoin held on centralized exchanges has consistently fallen since late May, with roughly 2,000 Bitcoins, worth roughly $66 million at current prices, flowing out of exchanges daily. Glassnode's Monday report found that Bitcoin reserves on centralized exchanges have fallen back to levels not seen since April this year, the month that saw Bitcoin blast to its all-time high of roughly $65,000. The researchers noted that during the bull run leading up to this peak, relentless depletion of exchange coin reserves was the key theme. Glassnode concludes that much of this Bitcoin went to Grayscale GBTC Trust, or was accumulated by institutions, giving a persistent net outflow from exchanges. However, when Bitcoin prices slumped in May, this trend reversed as coins were sent to exchanges for liquidation. Now the net transfer volume has moved back into negative territory again as outflows increase. Okay, and this is a chart, okay, along with a quote. On a 14-day moving average basis, the last 2 weeks in particular have seen a more positive return to exchanges outflows at a rate of 2K Bitcoin per day. Okay, and this is the chart, with inflow dominance versus the outflow dominance. Now, the second very interesting article regarding Bitcoin, obviously apart from the articles released by Elon Musk, okay, which there's no point mentioning at this stage. Right, the second article about cryptocurrencies was this one. Institutions cautious as crypto products over weakest volume, post weakest volume since October. Right, and this is what hyped, if you remember a couple of weeks ago, a month ago, this is what basically hyped the crypto sphere. When institutions coming into play, and there were big talks that institutions now are taking the lead in terms of buying and investing in cryptocurrencies. Do you remember?
Yeah, absolutely. Yeah, I can still remember that one.
All right, now let's continue with the article, and then we're gonna talk about it, and we're gonna have a look at some charts once again. So, sophisticated investors appear to be spreading their risk across the crypto sector, with multi-asset products beating out Bitcoin and Ethereum by inflows. Institutional investors are yet to regain confidence in the crypto markets, with weekly crypto investment product volume dropping to its lowest level since October 2020. According to CoinShares, July 12th, Digital Asset Fund Flow's weekly report of $1.58 billion worth of digital asset products changed hands between July 5th and July 9th. Wow, okay, that's a lot, man. Crypto investment products also saw outflows of $4 million for the week, with roughly 7 million existing Bitcoin tracking products. However, European Bitcoin products saw inflows overall, suggesting some investors believe the worst of 2021 bear market might be behind us. Ethereum products also saw minor inflows of $800,000 for the week. Okay, so are people giving up on these sophisticated products, you think?
It's actually, for me, it's Bitcoin's behavior is actually strange, and also the people's behavior of withdrawing in, but taking money out of Bitcoin. I initially was thinking that people's going to put money in now that the prices are so low. But you see actually totally the opposite, where people are taking their money out. But the one thing that I did notice is a lot of institutions are coming in now. I think there was one popular person that actually was opening up EFT also. I just can't get to the name. And I think that is where people are getting a bit afraid of, is now it's getting institutionalized. And the people want actually crypto to be for them, and not like for the big banks and all of these big guys are taking over. And I think that is where the fear comes in. And obviously, with interest rates maybe going up, and I think maybe that is also the other possibility.
Yesterday, I saw an article about Elon Musk slamming over the weekend, on Friday or Saturday night. He slammed Bitcoin and Ethereum for big fees and so on. And he was looking at Dogecoin. He was saying that Dogecoin might become, check this out. Are you sitting down? Right. Dogecoin, the meme coin that has absolutely no purpose whatsoever. Yeah, that's a joke. It might become the coin of the earth. What do you get from this? What do you mean the coin of the earth? I mean, basically, from what I understand, Elon Musk is trying to find a purpose for a meme coin, for a coin that was designed with absolutely no interest whatsoever, no purpose. Do you think people tend to react more to Elon Musk's tweets, and that's why we see these shake-offs in crypto markets?
I don't know, does Elon Musk have so much power literally to push a coin up and down? But obviously, Bitcoin,
so what happened with Dogecoin?
Yeah, the Dogecoin, I understand. But yes, I'm sure he do have an effect on it. But to the extent of how these coins can drop, especially when you look at Dogecoin and Bitcoin, and every time he's making a comment on Twitter, and then it just flies. I don't know if it's just Elon Musk or something else, but I doubt Elon Musk has so much power to push the Dogecoin and Bitcoin in ways. It's for me, it's a bit strange for me.
Well, it worked for it at least once or twice. Yeah, remember, he does own $1.9 billion worth of Bitcoin, if I remember correctly, or somewhere there. Yeah, 1.5, 1.9. Yeah, and we saw what happened with Dogecoin. Yeah, he managed to boost Dogecoin, the useless coin, by, I don't know, 16,000% in no time. So he has the power. It's not a question of him having the power or not. It's a question of, should people follow him blindly like many people did in the previous months, or is he starting to lose the confidence, the trust of the people?
It's like basically in South Africa, where people just start to loot. Someone make a comment and people start to loot, and I think that is actually where the problem comes in. People are just following what Elon Musk is saying. Obviously not, people must not do it, but it's very hard to control people. But I just actually, for me, if someone has so much power to move my asset class as big as Bitcoin, or as Dogecoin, then it becomes a bit of a problem. And I think maybe that is also one of the reasons why people are actually making these outflows as big as it is now.
Yeah, fair enough. Now, what's your view? Because I know I asked you before, and I'm going to ask you every time I have the chance. What do you teach your students in terms of cryptocurrencies? What's your view on cryptocurrencies? Do you encourage them to trade heavily cryptocurrencies?
No, not at all. Basically, the data that we have on cryptocurrencies is about 10 years old. And if you look at Forex and commodities and those type of asset classes, then obviously you have a lot of data where you can look at. For something that is 10-year-old, is still small, so obviously there will still be a lot of ups and downs, and you need to understand patterns and those type of things. So for me personally, I don't teach actually your cryptocurrencies. I always tell people, first you need to look at a lot of data before you can just jump into an asset class.
Because I know a lot of people, I'm talking to a lot of people every day, and even though they have absolutely no knowledge about trading in general, about the standard asset classes, which are Forex, commodities, indices, and stocks, they started trading cryptocurrencies, and they're trading heavily. And funny enough, some of them are making decent profits out of it.
Absolutely, but I would rather, because obviously it's people's money that goes into it. So I would rather, and obviously they rely on my information that I share with them. So it's important if I know precisely what I'm doing, because with the story of now inflation, I can go back maybe to the 1970s and say, hey, we had high inflation here. This is what the dollar did. This is what gold did, and those type of things. With Bitcoin or other cryptocurrencies, I don't have that evidence as in yet. It's only 10 years old. So it's very important for me to give people concrete evidence to say, okay, this is the scenario that you might get in inflation, and this is where the currencies and this is where the asset classes moves. So to just give people 10-year chart, to teach people on it's a bit heavy for me.
Yeah, fair enough. And also, considering the buying power, that South Africa has right now, it wouldn't really be appropriate for anyone to risk huge amounts of money and hard-earned money on such a volatile asset and such an expensive asset, because we can't deny Bitcoin is one of the most expensive assets on the markets right now.
Absolutely. And especially in rand terms, it's even worse. So your safest bet is really to have a trading account open. I think that is the cheapest one for you to actually do, where you can actually maybe store some money.
True. Right. Let's have a quick review of the markets. The announcement happened. When did it happen? 15 minutes ago, 20 minutes ago. There we go. So let's see if we're going to see a correction happening, or the downtrend for the euro and the pound will continue. By the looks of it, we see the euro trading currently at 118.10. Let me go on a 5-minute chart and see if the correction starts. Nope, nothing yet. If anything, we see the euro accelerating the downtrend even more. Yeah, we're looking at the pound, big gap for the pound from where the price was in the current market price, 138.14 for the pound ahead of the opening bell today. Let's see what's happening with the USD JPY. There we go. Yeah, we saw the big spike followed by a correction, an aggressive correction, and now we're seeing another green candlestick pushing the USD JPY pair all the way up at 110.42. Yeah, with RSI and stochastic trading in the upper section, indicating potential strength for the dollar. Right. Okay. Big day in the markets. Big day in the markets. I'm waiting to see how the Dow Jones and the S&P 500 will open. Check this out. At closing yesterday, S&P 500, 4,384.63. And for the Dow, we're looking at 35,000 flat. What do you reckon about that? How about that?
Look, the Dow, the Nasdaq, S&P 500. Honestly, with the dollar actually moving actually in this most aggressive way, I think the dollar index is upwards 0.4. Normally they have an inverse reaction against each other. The Dow Jones and normally, and then you have your dollar that goes up, and those guys are going the other way around. Maybe we will get the same reaction of what we normally expect that the market will do. But there we have to be very careful. It's normally easy to first let the data sift itself out, and then you actually place trades afterwards.
What would you look? Would you trade today after the opening bell, the U.S. opening bell?
Normally I take my time. I don't jump in when all the traffic is there. I wait, rather let the traffic slow down, let the market get direction. because then you will maybe sit with a situation with the Japanese yen, US dollar and Japanese yen, where it spiked up and down the whole entire time. So it's rather better let the market simmer its way through, and maybe you can look for opportunities afterwards.
Okay, very well said. This is what I'm doing as well. I'm trying to trade more technical than fundamental. However, I don't know why I felt this is going to happen minutes ahead of the announcement. Right. Okay. Let's have a quick look at the earnings calendar. See what else is going to happen tomorrow. We have Bank of America, Wells Fargo, Citigroup, and BlackRock reporting, along with PNC Financial, Delta Airlines, and Seven Trent as well. What do you reckon? Banks will do okay once again this quarter. All green for the banks tomorrow.
I think it's all green for the banks tomorrow. Especially with the thing also with WellsFargo that came out, and with the personal credit lines that were announced last Friday. That was a bit strange for me. But I think we can look for good numbers for them as well tomorrow. Tomorrow.
All right. And on Thursday, we're going to have Morgan Stanley reporting with Bank of New York Mellon and United Health as well. Okay, U.S. Bank Corp, Trust Financial Corp, People's United, a lot of banking institution. And on Friday, we're going to have Honeywell, Charles Schwab, and Burberry Group. Right, busy week. Right, question from trader to trader. What do you reckon is going to move more this week, stocks or currency pairs?
I think your currency pairs.
Currency pairs, more stress on currency pairs, you think?
Absolutely, especially if the week progresses after today's currency moves. We can expect tomorrow. Also, tomorrow is actually a very busy day. I think the Bank of Canada release a policy statement tomorrow. Bank of New Zealand, Reserve Bank of New Zealand also. And I think then Jerome Powell is testifying, if I'm correct.
Yes, and we also have total inventories.
Oh, yeah, so it will be very jumpy tomorrow, especially for the FX market.
Busy day tomorrow, yes, with announcements coming out early in the morning, as you mentioned, with the interest rate decision on the Kiwi dollar. We're going to have a few announcements. We're going to have the CPI on the pound announced at 9 o'clock GMT plus 3 tomorrow morning. Yeah, a few announcements from the Eurozone, industrial production, and the Spanish CPI, along with the German 10-year bond auction. And again, in the afternoon from 3:30 GMT plus 3, we're going to have the core PPI, Bank of Canada interest rate decision and the rate statement, crude oil inventories, and also the beige book. Let's not forget the beige book. That's going to be announced at 2100 hours GMT plus 3. Yeah, and to top it up, Jerome Powell will testify in front of the Congress, okay, on Wednesday and Thursday. Wow. Okay. Right. This is it. What do you reckon about the movements in the markets today? Did you see it happening or not?
Especially with everybody's focusing now on inflation. And I was definitely mentioning that also yesterday, that will be the trendsetter, because then the big questions will come in from Congress to Jerome Powell tomorrow. Well, I'm sure he will get butchered tomorrow with inflation questions. Will inflation stick? Will we see inflation going longer, transitory, and all of those things? So I think he will get butchered tomorrow with that inflation data that came out. I hope he will last that whole entire testifying tomorrow.
Oh, he's used to it, man, and he's setting the tone basically. So I'm not worried about that. And his stance is public. Yeah, we know he's dovish now. He's looking to keep the inflation under control, and if needed, he will squeeze the monetary policy way sooner than initially announced. So from this point of view, from my point of view, yeah, it's all good and clear with Jerome Powell. But still, we're going to have a lot of volatility on the markets, and volatility brings opportunity, and this is what traders are awaiting for. Right. Reiaan, thank you ever so much for being with us today. It was fun. We should do this more often. And who knows, maybe by then I will improve my Afrikaans so I can welcome you to the show in Afrikaans. Would you trust me with that, knowing what I know?
Very good question. I will definitely trust you on that one.
Right. Okay. Reiaan, thank you ever so much for today. Remember to trade responsibly until next time, and may all your trades be in the money. Have a great day, Reiaan. Right. Ladies, gentlemen, traders, we had Reiaan Hobson with us from Cape Town, South Africa. We had a very interesting round of market talks. Join me again tomorrow, same time, same place for a new round of market talks. And until then, remember to trade responsibly and may all your trades be in the money. This video was sponsored by Markets.com.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.